Greetings, this is Dr. Jeffrey Scott, and this is my pre-market stock market consult for Sunday, December 15th, 2024. I title this, Will the Fed Rate Cut on Wednesday Wake Up the Bulls? But I couldn't make the question mark any bigger without making the slide look funny, but I certainly wanted to. My email address is hgsidoc@gmail.com. Again, my name is Jeffrey Scott, and thanks for joining today. I'll probably post it sometime on the 14th. If you're new to my videos and you like them, hit subscribe, hit the alarm. You'll get notified when I post them. If you have comments, either email me at that hgsidoc@gmail address or post them on YouTube, and I will respond to everything that's constructive, positive, or negative. As always, these are for educational purposes only. Anything I recommend is in the spirit of education and should not be taken as investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. I have tools for multiple platforms, but I am an independent trader, and I'll probably show you a couple of the different platforms during this video. At this point in time, I don't think I'll be speaking at the Wealth 365 event, but it really is a great event, and it's the 13th to the 18th, which is also the JP Morgan healthcare meeting in San Francisco, which makes it tough to speak during the week then for me anyways. But you can see the link, wealth365.com/Dr.-Jeffrey-Scott. If you haven't signed up for it, please sign up using my link. I'll stick it in the chat box or the remarks box in YouTube. It's certainly something worthwhile spending your time at. If you like these videos and you want something more frequently, there's a couple of things I'd recommend. One is to go to stocksanddocs.com, sign up here. I don't get your contact info. It stays with becomeabettertrader.com. And they just post the videos for me, and I've been doing it for a couple of years. I try and do them during the week when my calendar will allow. Doesn't happen as much as I would like. By the way, if you're questioning why the video might suck today, using my term of my youth, it's because I'm in Santa Fe and the sound just bounces all off the walls here in my house. And another way, if you want more of this, is to join my Google group. It's called Top Down Trader. It is 100% free. You even get your money back. But since you're not paying anything, I don't have to pay anything back. You sign into Google Groups. You click all groups, find the group that you want to join. Look for Top Down Trader. Tell it how you want to interact, and then go ahead and join. I appreciate the interaction that we've seen today, as many of the members have been sharing their thoughts on some of the different tools that are out there. Now, I always like to look at the major markets, tell the story, so let me give you color coordination. Yellow represents the 6 major market ETFs. You could see that the Qs and the NASDAQ Composite were the leaders, and they were both below 1%. This was not a great week for the indexes. You notice the S&P 500 over the last 5 days was down 0.6. The Dow was down 1.7, the NYSE 1.8, and the Russell minus 2.5. So the broader indexes were down the most. You'll notice here in the salmon color that the equal-weighted Qs and the equal-weighted S&P were down 1.3 to 1.6, and the equal-weighted lagged the cap-weighted. And then interestingly, sitting up here are the mega caps, and that's probably what was working the most from a technology perspective. That helped to pull up the Q and the NASDAQ. Different week, small caps, which have been leading, lagged on this week, and we'll take a look at this more as we go forward. Down here, you can see the only group that was positive on the week was discretionary, and this is in the S&P 500. Now, my buddy Sagar Nandi has a great set of tools called Q. This is Q Edge, and it tells me that in the S&P 1500, so this is not the 500, it's the broader 1500. Remember, I showed you that the broader markets underperformed. All the sectors were down, 77% of the industries were down, and 69% of the stocks were down. It was a tough day to make a lot of money long stocks, unless you were in some of those mega caps, or you're a great stock picker. We're only in a couple of positions. We'll talk more about the buckets, but the buckets are getting more bearish, where 67% of the stocks in the S&P 1500 are below the midline, and we're shifting left in where the buckets are. Down below, it shows you how bad Friday was. The last 2 days were bad. Frankly, the week was bad, with 82% of the sectors down, 79% of the industry groups, 72% of the stocks. Numbers almost equally bad over the last 10 days. So we've really turned down. The interesting thing is, for the most part, the indices have not broken. Here is the total view, market breadth, from Q and Cigar. And this is such a great tool. It combines the NYSE and the NASDAQ. Let's just look at what it tells me. Let's start at the top. It shows you stocks above the 50, above the 200 in white, and when the 50 is above the 200 in orange. Notice they've broken down. You look here at advanced decliner, broken down. Up-down volume, broken down. New high, new lows, coming down. Here is that composite index, just off its highs. These skull and crossbones are confirmed Hindenburg omens, which often signals before a market breakdown. The light blue color, both on the up arrow and the skull and crossbones, is a bango, which is an exuberance to the upside. This here represents a 13-week new high, new low. When it's up at the top, the market's usually correct by pulling back. When it's down at the bottom, the market's correct by bouncing. We're not quite there. Here we have accumulation and distribution signals. There's been nothing recent. This magenta line represents growth versus value. You can see growth still in charge. And the blue line represents small cap versus large cap. When it's pointing down, it favors large caps. Here we can look at breaking out the NASDAQ and the NYSE. You can see you've had the confirmed Hindenburgs on both, and that's something I watch. The other thing is, look at the breakdown on the NYSE, even more so than on the NASDAQ. But again, even though the 13-week or 3-month new high, new lows have come down considerably, they're not in a guaranteed certainty reversal area. It can reverse any time, but it could certainly fall more. And if we look at the major indices, they've all broken down up top, yet you can see things like the NASDAQ 100, even though breadth has weakened, still at all-time highs, similar to the S&P 1500 and the S&P 500. The Russell has broken the most. None of them are in the guaranteed reversal area. Next, I like to look at my timing model. This is from my trading app. The trading app takes the relationship of price to the WMA and the bongos, and it synthesizes what the buy-sell is, and it knows the rules to flip. So the spider remains in a buy since November 6, 2022, 23 rather. It was in a buy the entire entire year of 24. All the weekly charts are green. So even though I'm going to sound more pessimistic in this video, my long-term timing model still says it's okay to be long. What is different this week is if you look at my daily, you could see that both the Russell and the diamonds have flipped to red. We've also built the 13-week new high, new low in here, and you can see it's approaching areas that we often see a reversal, at least on the daily. This is a tool in my app that gives me a sense of what's working. So I put 4 market ETFs in the VIX here, and you could see on Friday the only up ones were the Q and the volatility. Well, volatility rising is not necessarily good for my portfolio. The laggard was the Russell. You could see down here on Friday, tech, discretionary, and utilities were the ones that were positive. If we look down here, we could see cannabis, semiconductors, cybersecurity, clean tech energy were leaders. Over up on the upper right, you could see that the new high, new lows have deteriorated. They're all new lows net. And when you look at the buckets, not only the S&P 1500, where all the sectors negative, the NYSE, and the NASDAQ, when you have somewhere between 30 and 33% of the stocks are up, depending upon which index you're looking at. Not a bullish market. Now, if you look at 5 days performance, you could see that VIX was the leader. The Qs were in second place. All the gain really coming in on Friday. And over 5 days, discretionary was the leader, followed by communication. Now, everybody I know, everybody I talk to says, oh yeah, the Fed's going to cut. And you could see there's a 96%, well, at least the market is pricing in a 96% likelihood of a cut. Now, I listen to the CPIs, the PPIs, the employment situation, jobless numbers, and I have to tell you, I haven't been feeling like inflation's coming down. Now, I don't think the Fed holds at this meeting, but I really am curious what they're going to say about forward-looking. Why are rates rising in the face of an impending rate cut? You can see the 10-year in white and the 30-year in white are rising. Is there a recession in our near future? Well, this is the week the 10-3 reverted to norm. The 10-2 years is above zero. So both of these are telling me that we probably have a recession coming. These gray bars that occur after normalization is when that recession comes. So that recession doesn't have to be starting on Monday. It could still be a few months away. Now, if we had a recession imminent, you might expect credit tightness. There's none. And you might expect a massive slowdown in the economic productivity, kind of like we saw in 2020. So is there a recession in our near future? There always is a recession in our future. Do I think it's going to impact before the end of this year? No. I've been thinking for months the natural place would be after the inauguration. Next question. Breadth has deteriorated, kind of. Here's that 13-week new high, new low in Warden, which is getting down to a reversal area. But when you look at stocks above the 200 and stocks above the 40, they're not at the area that you typically see a reversal. Here are the buckets. Now, Praveen and I are working through to validate this, but I think, the actual numbers, because I've seen it vary among programs. But what is true is we've had a massive shift to the left where we're starting to accumulate stocks at the bottom of the bands. That's usually one of the first things that starts to happen before we reverse. In most markets, it doesn't get above 25 or 30 before we start to see the market go higher, a reversion to the mean. And you could see pretty balanced NYSE, NASDAQ, S&P 1500, and the Russell 1000 have all weakened considerably. Where were they a week ago? They were where these thick things were. It was kind of a bell-shaped curve. Hindis have fired all over the place. So the Hindenburg omens typically do nothing, small pullbacks, but 1 out of 4 predicts a major market correction. There has not been a major market correction. So when I look at whether the NASDAQ or the all NYSE common, you could see there have been several Hindenburg omen signals. Markets turned down this week, growth lagged. This is looking at ERG, which is EPS rank, plus relative strength rank, plus group rank, maximum score 297, and looking at performance based upon ERG. This gray line shows you how few stocks there are at the tail and the head, so I usually cut that out. And what you see is a pretty consistent drop. as you get higher earned. So growth was not in favor. You could see returns were worse on good earnings per share. Returns were worse on higher relative strength. So this was another rotation week where we were bringing in some of the laggards. Now over here are a list that I follow on a weekly basis. So we'll just start for the sake of understanding. S&P 1500's up here. It was down 0.59. Of all the groups, and most of these are bullish groups, a small handful outperformed the S&P. Now, this was my buy watches, and they were down less than 2%. My shorting candidates, which I want down, were down 1.88. And the holdings that I had at the beginning of the week, if we assumed an equal dollar stock positions with no hedging, were down 2.07. So it was a challenging week. Interestingly, the weekend review in IBD minus 2.5, what's now called the market surge, 250 or 300 was down 2.8. And then my top relative strength list was down 3.1. The high growth stock 100 from Ian Woodward was down over 4. Mike Scott focus list of high quality growth stocks, although he doesn't advocate buying them all, down 4. And the IBD 50 down over 4. So growth really was punished. Know your news and earnings. You got PMI and manufacturing on Monday. You got retail sales and building confidence on Tuesday. And on Wednesday, you got housing starts and permits. But at 2 p.m., you get the Fed decision. On Thursday, you got jobless claims. You got that Philadelphia Fed manufacturing survey expected to be positive now. You got existing home sales and leading economic data. And then, on Friday, you've got the PCE complex, and we know how much the Fed pays attention to that. On the right, you can see earnings have slowed down quite a bit. We're nearing the end of the earnings season, and probably after the first, we'll start to see the next quarter earnings start to play out. And remember, one of the favorite seasonality plays in January is Netflix. If we look at my comment in the lower right, I made this a decade ago. I haven't changed. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So final thoughts. The rally seems to be at risk with advanced decline divergences, Hindenburg omens, breakout failures, and breakdowns exposing the fragility of this market. The Fed meets on Wednesday. We all expect a cut. We'll probably get the cut. However, it's the statement and the press conference that will matter. If the rally holds above support on Tuesday, then we still have to deal with jobless in the PCE complex. As mentioned, we are nearing the end of earnings season, and as much as any in recent memory, those that won were rewarded and those that missed were massively punished. Now, the volatility is still low, so one might think the risk is low. However, as often stated by the dearly departed George Lee, when the VIX is high, it is time to buy. When the VIX is low, look out below. With low levels of volatility, option premium is actually favorable for option buyers. So what I did this week is I still have quite a few longs, and my long-term portfolio is still intact. But on my shorter positions and a lot of my options trades, I took profits, raised cash, and then I did buy some protection on my long-term accounts with contra ETFs. Now, if I'm lucky, I won't use it, and it'll expire, or I'll close it at a loss. Why? Because it's insurance. You only use it if you need it. Who wants to be sick or die or get killed in the market? Growth got punished this week. Still some strength in the mega cap tech and semis. Still some opportunities in small caps. But as the market goes, so will the stocks. All right, so now on to the charts. So I wanted to mix things up. Well, actually, one more plug for stocksanddocs.com, my most days early morning video. And then if you like these videos, I release things during the week that I don't post anywhere. And I welcome you to Top Down Trader so you can learn with all of us as we continue to work with each other in a two-way interaction or many-way interaction of sharing ideas. Top-down trader Google Group. And then I am thinking now about what I'm going to do for education programs. I'll be reaching out to the folks in Orange County to see if they want to do one in June. And then I really want to do one in December in Florida. So more to follow in 25. So that's enough of the PowerPoint. First 20 minutes are done. Now, normally I go in, I spend most of my time in wealth charts, and I probably will as well today. But I am going to show you some of my key things that I do. Now, I don't expect to give you 50 stocks to buy today because, frankly, I'm not buying 50 stocks. I think this market is a risk. It's not to say I won't nibble and I won't take the things that make themselves available to me, but I am concerned right now about the status of the market. And with the Fed, the PCE, and jobless claims, I'm not saying you should be concerned as well. I'm just saying that this is a market that is at the minimum risky. Now, for whatever reason, it's not letting, I know why. Okay. It wasn't letting me to do the F11 to make that full screen. There we go. So let's go into indexes first. Let's look at the 5-minute charts. This is the spider. Friday, Thursday, Wednesday, Tuesday, Monday. And you could see that the prior week closed somewhere on this candle. All right, and then so the market traded down Monday pretty much consistently, traded down Tuesday after an initial rally at the open, and then Wednesday a big gap up. This was when I believe the CPI came out and was perceived to be dovish. Thursday, PPI and employment both were potentially going the wrong way. The market dropped. And then Friday, after a head fake here and a little bear trap, the market sold off. So we sold off on the week, although we did get positive on the week for a bit on Wednesday. If we look at the other ETFs, you could see that this guy here, which is going to be the NASDAQ, is the one that outperformed. You could see everything else was selling off while the NASDAQ was maintaining its leadership. If we look at the S&P 500 or the spider daily, and let's kill this one. Let's save that, because I always forget to save that. You can see that you had some RSI divergence here. It's in the process of rolling over. Will it just head fake us, give us a bit of a bear trap here? Or is it going to actually fall and test at the 50, which might be a reasonable expectation if this market pulls back? Look at the weekly chart. Does the weekly look that bad? Kind of almost an inside bar, down 0.59%. So we're hearing a lot of doom and gloom about how this market has broken down, but reality is it's still holding up pretty darn well. If I look at the daily Qs, all-time new high. Intraday on Friday, still closing at or close to an all-time high here. Looks different than the spider. This is the strength of the market right now. If we look at the weekly Q, you could see push to newer highs. It has white here means there's a potential divergence. We'll have to see how that plays out. The diamond, which was a big leader, has sold off and is pulling down into what will likely be a support area. You can see on the weekly that this one looks very different and was down 1.75%. Here is the Russell. Now the Russell nominally set a new high, first high since November of 2021, but has been selling off since. and really looks to be headed towards that 50-day moving average. On the weekly, you could see after a spinning top here 2 weeks ago, 2 down weeks in a row on the Russell. So the markets, they're holding up better than you might expect, especially the Qs. Spiders are okay, and then it goes a little bit downhill from there. And it's no surprise which ones have the daily sell signals. If we look at the VIX on the week, you can see the VIX was up 8%. And if you look at the dollar, it seems to be going up nonstop. And a strong dollar, higher rates are not good for U.S. equities. If we look at commodities, gold and silver being pressured by the U.S. dollar, the triumphant of what would not be good for U.S. stocks would be rising oil prices. And you could see that's what it looks like on the week. That on the week, oil is trying to get above the 50 period, but was up 5.65%. Natural gas got above the 200. So that gives you a sense of the underlying commodities. And the 10-year, like the dollar, seems to be going in one direction. And let's just look at what it looks like on a weekly. And you could see sitting on the 50 up 5.75%. So there's reasons to be concerned. And maybe George, may he rest in peace, isn't wrong. But when the VIX is low, look out below. Done the timing models, let's just look at breadth. And let's look at these two curves. When these curves are pointing up, it tells you that equal weights are dominating cap weights. These are showing you that large cap spiders are beating equal cap, large caps Qs are beating equal. They both are ugly looking charts though. We've not had a big breakout in credit tightness. We have broadened out semiconductors, and that's about all I see here. If we look at the S&P 500 sectors compared to the spider, we're looking to see where the leadership is, and the leadership remains in discretionary. It's been that way for a bit of time, and that's something I may take into account when I think about where I want to be looking. Let's see, materials, very weak. Communications came off their highs. Energy, despite oil going up, is weak. Financials are middle. Industrials, which have been leading, have broken down. Techs, neutral. XLP, XLRE, XLU, which should go up in a defensive fashion, are doing nothing. And then XLV, technology, is weak. So everything except for perhaps financials, communications, technology, and discretionary are lagging even the S&P. Now we go into the various ways that I might digest the market. Let's start with the heat map, and let's just look at some of the big cap techs. So you can see the S&P 500 was down on Friday. NVIDIA looks at risk of breaking down. It is broken down below the 50, closed off the lows, but was down 2.25%. If you look at relative strength in OBV, NVIDIA looks like it's breaking down. Now, it's also at an area here that it's bounced multiple times, but that's one I'll be watching. Tesla, what a monster. Ever since the election, Tesla's had a massive move. Nothing else to say, finished at its highs. Broadcom had great earnings. We're sitting in this triple top area, and then on massive volume with earnings. You can see that the earnings, $1.42 versus $1.38. It's what they said that mattered. Now the problem with Qualcomm, look at that high low, it's at 100. Relative strength and OBV look good. AMD breaking down despite Dr. Su winning the Entrepreneur of the Year or CEO of the Year. Apple looks great, just pausing to refresh. Amazon right off of its highs, pulling back. Microsoft, could that be a shooting star in a reversal? We'll see. Meta has been doing great, but here has a low close doji, and maybe it's going to pause here. And Google, also a little bit of a pause. So not all is great in big cap tech. We go into the wealth scanner. I'm going to demonstrate a couple of things that I do to figure out which is the leading industry group. So first we're going to look into wealth scanner. I have created a list of ETFs that are called top-down indices. I look to see which ETFs are above 800 and near the top. Do you notice nothing is above 800? That is a substantial weakening from the last week. I can see that FANGs are up at the top, software, FANG, Qs, telecom, space exploration are some of the leading groups right now. But notice nothing is above 800. If I want to look bearish, I hit the bearish signal. And then what pops up is global real estate, biotech, materials, real estate, dividends, REITs, pharmaceuticals, and so on and so forth. So it would be totally reasonable to start looking for short picks right now. But I haven't forgotten that my weekly timing model is telling me I can still be long. So I have started nibbling. I can now, when I've seen this, I might want to drill down further. So since the strength in the market, and we're going to stay the long side, is the FANGs. We've already looked at them. Let's back to bullish. Tech software, IGV. I don't know if I have IGV, so let's go into the CAT scanner and let's see what we have for technology. I could look at just technology. And this is going to look for pullbacks and uptrends. I look for the most dots. There's AVGO, beautiful move, broken out, probably too extended for my taste. ASX is a lower cost semiconductor. Had a nice move on Friday on great volume, breakout momentum out of a squeeze, relative strength at OBV look good. Got to clear that 200. Celestica, contract manufacturer, here's your pullback. And then a big breakout on Friday, 3 dots, relative strength OBV good, not overly extended. Sienna, this is what you want to see after a big gap up, continued going higher. Another one that was potentially viable, I thought, was Taiwan Semiconductor. So big uptrend, pullback, breaking out here, volume and momentum. And you could see not extended, relative strength at OBV looked good. TSM was one that I liked a lot. ALGM, they make semiconductors for the auto industry, is way below the 200. I'm not interested. So that was in technology. Now, another thing that we could do is go to the combo buy list, which is a large list, which I now exclusively post to the top-down trader members. So that's a plug to join for free. And you could look through here and see the general market. Restoration Hardware, it's back, but it's too far back for me because look at the high-low jump's going to come in at 100%. But what a great response. Let's look at the 248 to 264. Negative surprise. How is it doing so well? Whisper numbers. Some people might know something, and it's what they said with the earnings release. ASX, we already looked at. Celestica, again, that's a beautiful uptrend and a pullback and a contract manufacturer. ELF, beauty company. It started a new uptrend, pulled back here and broke out on volume breakout momentum from a squeeze. Relative strength and OBV are both positive. So there are stocks that look good. Lamb Weston Holdings. Interesting candle there. Let's think about what happened. And I don't see earnings here. Earnings were back here. It opened up lower, continuing this drop and falling below that support on the 50-day moving average. And then intraday, there must have been a reversal, and it closed off the highs of the day, taking out that 200 on massive volume, breakout momentum from a squeeze. I like this chart a lot. Upstart, something like this to me is too far gone. Verona Pharmaceuticals, don't know much about them, basing here, breaking out. Let's see if there's anything else we want to look at here. And if you're a bottom fishing fan, at some point, all that real estate that Walgreens is in, you downsize a bit, get rid of some losing assets, and Village MD might be one of those, and you look at a stock, an incredible company that's not going anywhere. It broke out above the 50, a little pullback, and now it's going again. So those are some of the longs that I found using wealth charts. Now I want to do a couple things before I flip into some of the other programs and see if we can expand on the list of interesting stocks. If I go into seasonality, and where is that what I want? I want to pull in, well, first of all, if you want to look at tendencies over the next 4 weeks, you could see that the major ETFs, the spider over the next 4 weeks is up 0.79%. So somewhere here, I want to move this. This says January 18th. We'll leave it there. This one says August 4th. Okay. All right. So I'm going to look at between December 11th, which was a couple days back, and then January 21st. Let's look at what the spider does during that period of time. Up 8 out of 10 years, average return 4.37%. I'm no longer looking at 4 weeks. I'm looking at, that's September 18th. Never mind. It shouldn't be September 8th. It should be. All right, let's try that one more time because that should be matching up. Nope. So maybe this is the. When do I do this? All right, that might look better. So I moved the wrong one. All right, I want to go one more week. All right, so this is looking, and we want to go back 1 week here. All right, December. Okay, so if we look at the spider from December 11th to January 22nd, up 7 out of 10 years, but relatively a flat move. If we look at the Qs, up 8 out of 10, up 1.25. But if we look at the small caps, 6 out of 10, 0.63. So even with historically the Santa Claus rally, the next 4 weeks, although bullish, are tepidly bullish. Something that is kind of interesting, and you could see some of those 4-week scores in here. But I want to talk about one stock, and I want to talk about Netflix. And Netflix, if you bought it this past week, or you bought it on Monday and sold it on January 22nd, it's been up 8 out of 10 years. Now, some of these returns, 23%, 12%, 16, 10, 11, 8, 7, and 6 have been pretty significant. The two down ones in 22, it dropped 38%, 22 and 16. 22 and 16. If you were to look at this over a longer period of time, the results are 9 out of 10 or 10 out of 10, depending upon your window. So Netflix seasonality is positive and much greater than we saw of the indexes. Let's pull up the NASDAQ 100 and see what else looks good over the next 4 weeks. So FANG, which is an energy stock, 7 out of 10, up 7.24. Micron, the memory manufacturer, it's up. It's interesting, over here, December 11th, January 22nd, is relatively flat. Here's Netflix. So you could see that most of the, how many are bearish in the NASDAQ 100? So you've got more bullish than bearish in the NASDAQ 100. Interestingly, Apple, despite retail and all the other things, it's a 50-50 play over the next number of weeks. All right, so seasonality built in is pretty cool in wealth charts. Now, another tool that I like to use is TradeStation. So in TradeStation, especially for those people that have bought my indicator set, what I have built with Van is an app, and it looks like a radar screen, but it's a scanner. And it allows me to pick my list, and I hit start, and it runs. So for example, I want to look at technology. If I hit start, you'll see it take a couple of minutes, but it's going to run and give me the signals. So it works like a scanner. It's an end-of-day tool, but I use it for fishing. Well, let's start here with the top-down piece, which is this radar screen. So what I have in this radar screen, daily indexes, the S&P sectors, and then that same ETF list that I put into wealth charts. I could look at force index. I could look at my modified force index, which is this one, which is what I use in the, similar to what I use in my app, or I could use it as relative strength change. I could look at rate of change, or a number of different ways of ranking. When I look here and I look at what's leading, no surprise, FANG, semiconductors, Q, semiconductors, and triple Q. So that's the groups that are leading, okay? If I did that, what I might want to do is say, open up technology. So I was able to data, add symbol list, and I created a list for the SMH, of the holdings of the SMH, which is a semiconductor ETF. And why did I choose that? Because the semiconductors were where the strength was. And then I hit OK, and they actually populated here. And I don't need to have it twice, so I'm going to remove this one. So one way of doing top-down is I can now apply the same approach like I do in my app to see where the leadership is. And what we could see on that 2-day modified force, AVGO, MRVL, let's just see if we can copy these. Now let's take a look at them. So let's just go into my, which do I want to use? Nope, I want to use this one. So let me create a list. Let's put in I'm going to put in a new application. Let's put in a radar screen. And let's stick it down here. Tighten it down. I'll come back to this in a few minutes. Let's put in those stocks. And let's take a look at them. This is daily on top. Weekly on the bottom, you have my dots, and you have the high jump. You also have OBV and relative strength versus the spider, which sometimes gives me trouble on this layout. So AVGO, let's make it the same color there, light blue. I guess they call it cyan. AVGO looks interesting here. And this is everything that Chris Morales and Gil meant, I believe, when they talk about a Bible gap up. So on earnings, we have a breakout. We have multiple dots. We have a CPR signal here. We took out resistance. I love it. The problem is the high jump's at 100. So I think AVGO looks great. The question is, does it go higher, which it likely does, or does it stall for a little bit? So I might put a buy signal above the high of the session, because if it starts to pull back before it goes higher, I might be able to buy it cheaper. In the current market environment, this is a leader, strong leader. I bet it doubles from here. It's just extended on the short term. Marvell, another semiconductor. This one pulled back into the moving average and had a similar breakout. It had Bible gap up, pocket pivot volume, and a breakout with the CPR off of support. Again, high jump at 92, not as bad as AVGO, and perhaps that's something you could look at. I do like Taiwan Semiconductor here. You could see, let me see if I can get that back. It is in here. Yeah, I mean, there we go. So the problem is it's there, and then how do I have to gently manipulate it? All right. Well, I'm not going to spend time on it, so it is there. It's red, so we know it's below price. So Taiwan Semiconductor looks like it's getting ready on the relative strength. The relative strength weekly and OBV are fine. Take out of this trend line, and I might be buying Taiwan Semiconductor, KLAC. All right, so I've got to do, I know what I need to do. Not doing it. All right, let me see what happens when I do this. I'm just going to blow this up for a second. Once I get something on my mind and I want to fix it, I won't let it go until I fix it. All right. So you can see it's actually crossing over, which is actually bullish in this. Now, of course, when I do this, you won't see it anymore. Well, yeah, you can. So this one looks very interesting to me. And this is a KLAC. Before I say it looks interesting, look at the price. Take that back. That looked interesting to me. The relative strength looks interesting to me, the OBV. But no, this one is well below its trend line, so I would not be interested in CLAC. ASML, this is one that is extremely volatile. And you could see it's pulled way back. It's got some resistance to get above. Micron's got good seasonality. It's sitting here in a wedge. Maybe not yet. TER running into resistance. Now looking at the weekly, if this thing was to break out above that line of resistance, that might be interesting. OLED, no, too far down. Skyworks, moving up a trend line here. Again, it's well below the 200 and everything else. I don't like that. LRCX. So all these actually look okay. I guess my favorites in this are probably TSM. And I think the other one I like, well, that's probably an MRVL. So what I did from a top-down perspective is I looked at This tool identified where the money was flowing or what the best looking indexes are. And boy, they all look like technology and you get quite a way down. And then I dove into the semiconductors, which is right here after FANGs, to take a look at if anything looked interesting. And what we saw was AVGO looks great, but probably extended. Marvell looks okay. And then the Taiwan Semiconductor. All right, show you what else we can do. Now, if you have my basic TradeStation package, you have the app here. And so what I do is I run the app on a large number of stocks, which populates, are they in a squeeze, squeeze release, how many up dots, down dots. EMS is the early signal on wealth charts. CPR is a different signal. It's not on wealth charts. Green candle high, red candle low. Bongos and how many bars, relative strength versus the spider and how many bars. What's the high-low jump, and then trying to come up with something close to what you see in the newspaper by relative strength. So I could rank them by up dots, for example. And you could see Mesoblast is a high relative strength stock. It's a biotech, and biotech I think we know is weak right now. But here's a stock that had breakout over the moving average, CPR, a gap, volume, breakout momentum. The blue one is the early EMS signal. Relative strength breaking through. OBV looks good. The weekly chart looks good. MESO looks interesting. Restoration Hardware, great company in the past. I guess it's great again. But this thing had a major run on earnings. And the earnings were good, but look at the opportunity we had here. Pull back to the trend line and then a big move up. This breakout would have been interesting, but that was about $60 ago. There's AVGO. We looked at that. Centene is a managed care provider. They do Medicaid. They picked up a lot of accounts, and it's got the full Monty here. It's got the EMS signal. It's got the CPR. It's got volume, breakout momentum coming out of a squeeze. Not extended relative strength and OBV look good on the daily, lagging on the weekly. The problem is this thing has been destroyed and you'd have to be a bit of a bottom fisher. Well, you could go through all these stocks ranked by dots or anything else, but here's how I make it happen. Filter results, open, and I have a number of scans I like. So let's look like a pull back in an uptrend with the squeeze, or just a pullback in an uptrend. Let's look at pullback in an uptrend with a squeeze. Okay. And now it's going to make this list smaller. Still quite a few of them. Well, that's interesting. I thought I asked for the squeeze, so let's look at what the filter has in it. Too many things open at once. I hate when that happens, but it does happen, and this is TradeStation, which is notorious for doing that. Oh, don't do that to me. Okay, I'm going to pause and reset this. All right, I'm back. So what I've done here is I actually rebooted TradeStation. Those that are TradeStation owners know what it's like when it kicks you out. I ran the S&P 500 instead of the 2,200 stocks. I filtered it, and I filtered it for stocks that are pullbacks in an uptrend with a squeeze, which is one of my preset filters that I use, similar to other programs. And then when I did that, okay, I got these three stocks. Lamb Weston is one. Have to break out above those trend lines before I got excited. Regency Centers, it's a REIT. Probably pays a dividend. It looks actually pretty good. Let's just blow up that chart and look at it. Nice uptrend, sideways move, following the trend line. Had a new EMS signal come in. That's interesting. I might like that one. And then the other one that looked at was FactSet Research, which is a $500 stock, which most of us are not going to buy a lot. And a break above this trend line would be interesting. So what I do is I pick my list, I run it, and then I run various filters on it. Now, some of you have heard me talk about Sagar and his Q tools and how much I like his Q tools. And let me just show you something really cool. I think it's really cool. Van, my programmer for TradeStation, was able to combine the signals in Q with my scanner, and then I can create scans that look at all of them. This is that big list of 2,200 stocks, and you only can do this if you own the Q tools, because you need a file linked to your user and your TradeStation account. So I have a radar screen up here. Let me just show you what that looks like. That looks at a bunch of things, including the Q radar screen. And then I added to it dots, the relative strength radar, and then viable gap ups, because it can tell me who's got the leading volume on a day and an intraday period of time. One of the things that I like to look at. So that's radar screen, but then this is the app scanner. And with this already done, I can now go to filter results again. And this time I want to open a different one. And I want to open pullback and uptrend with a Q breakout. So I don't want stocks that haven't broken out yet. I want stocks that just broke out today. So hit OK. And that 2,200 it's going to get to be a much smaller number. And, well, not that much smaller. So let's just look at AVGO. We know this is the star of the day. Big breakout. Here's the trend line breakout that it broke above. And you can see each of these have a bullish breakout. DXL, Delic Logistic Partners. I think that, I don't know if that is whatchamacallit, MLP, but broke out from resistance. That looks interesting. KRC is a REIT. Broke out from here, still got the big one above. And Lamb Weston is one we've looked at already. It's got to get above that resistance. But it did break out above the first line. So it's combining what I do with my dots and bongos with the trading systems that Sagar has. And if I want to be bearish, I could filter results. I can open and switch to pullback and our retracement and downtrend with breakdown. Let's see what pops up here. Now, this is not a list of the most bearish stocks in the market, so we may or may not see many come up. It's looking at that previous list, and these are the ones that come up. And I know from my review that some of these actually look interesting. Look at NVIDIA. Broke through a trend line. It's sitting on a lot of support here, but a break of these trend lines would be, won't be good for NVIDIA or the market. Progressive Holdings, an insurance company. I'm looking for a retracement in a downtrend. There's your retracement and a breakdown. There's just two dots. Look at the breakdown in OBV, weekly relative strength. Another one that I looked at is Airbnb, and breaking down here. And here's your retracement and a failure on the weekly. So I really like how I've been able to combine. Lastly, let me just show you how I do some of that top-down work inside the new trading app, which will be available after the first of the year. And basically, let me kill what I was playing with. I have a list that I call JAS. JAS list are the combined NASDAQ, NYSE, and Amex. And then it includes only stocks above $1 and 100,000 shares. It's 3,347 stocks. Each of these are assigned to a sector and industry group. When I go to top down, you will see on the left the 11 sectors and 144 industry groups. I can look at intermediate momentum and see that defensive is on the top. Now watch what happens when I click defensive. When I click defensive, all the stocks in defensive, there's 136 open up, as well as the 12 industry groups. And I can rank everything by change, percentage move. I like that short-term momentum. And I could start to go through, and there you go, Lamb Weston Holdings, which we saw before multiple times. I think it's going to, that's not the pattern. It takes a little bit of while. There you go. Breakout above the 200, that really long sort of a belt hold bar. So that's interesting looking. Look at the volume here. The dots, both the OBV and relative strength show green ones, which means they crossed above the moving average this session. So top down, I could look at sectors, the industry groups in the sectors, and then the stocks in the industry group or the sector combined. If I wanted to turn off defensive, and I've got all the 144, I just want to look at the top 5. I can click on 1, 2, 3, 4, and 5. And now only the stocks in the top 5 industry groups are going to come here. And then I could start going down this list and do various scans. There's Red Hat, AVGO, AutoZone. This thing's been on fire. $3,300 stock. Tesla. Wow. So I think we've really built a really cool way to speed up your analysis in the chart in the new app. If you want to find out more about the app, join Top Down Trader, because I'm going to give everybody in that mailing list $100 off on the app, in addition to what other stacking discounts I offer. And now the other thing is, and just to finish, we also connect this into TradingView. And when it opens up in TradingView, you'll see my tool set will show up as well with the dots, the trading systems, 2 different time frames of the relative strength versus the spider, a weekly and a daily, and the OBV versus the moving average, the high jump and the bongos. And one of the cool things that we were able to build inside the TradingView app is a fundamental list. So you could look at what was reported, the change, and whether it was a surprise for both earnings and revenue when the next earnings are coming out. So I think I've spoken for over an hour. Sorry for the glitch in the middle. I'll blame it on to the TradeStation gods. It's not the first time it's kicked me off, and I guarantee you it won't be the last. Have a great rest of the weekend.